Welcome back to the Engage podcast. Ryan Argenta here. As we head into Section 6 negotiations, there's a lot of noise out there. We hear terms like strong profits, premium demand, record revenues, but we also hear things about inflation, geopolitical risk. There's a lot of questions about how long this environment actually lasts. And so today we're going to zoom out. What does the industry look like as a whole? Are we at the top of the cycle? Are we just getting started? More importantly, what does this mean for pilots as we head into the next contract? And to help us break this down, I've got Rushi Patel. He's the senior analyst from ALPA's Economic and Financial Analysis Office. And he's been tracking not just Delta, but the entire industry. He tracks profit margins, demand trends, and the macro forces shaping where all this goes next. And so we're going to talk about premium revenue, why Delta and United are capturing the bulk of industry profits, while Delta is killing it right now financially, and what's happening with things like oil prices and inflation and global instability and how that can impact the next few years. So, Rushi, thanks for being here, and welcome to the Engage podcast.
Thanks so much, Ryan. It's good to be here.
Yeah, and so we don't often have non-pilot professionals on the show, and so this is pretty special to have you. You work for ALPA, and you actually work here in Atlanta in the Delta MEC building. Tell me a little bit about yourself. Give me your quick background and what you do day to day for the Delta MEC.
Sure. As you mentioned, I'm an analyst here in the Economic and Financial Analysis Department, E&FA. You guys probably heard of that term. Been with ALPA about 10 years now, focused on primarily contract negotiations for various carriers within the U.S. and Canada. I've been working with the Delta pilots now coming up on 3 years. So this is the first round of negotiations I'll be assisting the pilots on in this particular property. But I've been in negotiations with other properties across the U.S. and Canada during my tenure here with ALPA. Other things I also work on is within the Delta MEC, I work with other committees, particularly the negotiating committee, scope committee, communications, strat planning. A lot of my role is, numbers and analysis driven, but I also, have meetings quarterly with executive management at Delta. Participate in MEC meetings. I usually give an industry overview at each MEC regular meeting, whether that covers, macroeconomic factors within the United States and how they impact airline revenue projections and economics within that industry. We also give comparisons of earnings and, other profitability metrics, financial metrics within the U.S. industry, comparing Delta to their peers, whether it's, the majors, the ultra low cost carriers. Basically, any airline that has publicly available information, we're able to, derive that information and have a comparison. So,
yeah, you have a pretty unique seat in not just this office, but overall, right? And so you work for ALPA. Your paychecks come from ALPA and pilot union dues, but you have a unique perspective because you do get briefed by Delta management, by their executives. And interestingly, you kind of work with network. So you get the inside scoop on some pretty fun things like new routes.
That's right.
New aircraft, things like that. And so you incorporate that into, say, the inside baseball of the economic situation at Delta and the industry as a whole.
That's right. Yeah. Quarterly, we usually meet. We have two separate meetings, one on the finance side with the CFO and the finance team to go over some basic high level financial impacts that Delta is seeing from, what the CFO is viewing within the industry and within Delta itself. So it's, very interesting to get some of that information. Of course, a lot of it's confidential and proprietary, but, at least to get that perspective from the CFO on, hey, this is what, where Delta is compared to their peers and what's going on within the industry. And then all the separate meeting, we also meet with network planning. And a lot of those meetings is built on what's the current fleet makeup, are we anticipating more orders? How is the company utilizing their fleet, whether more domestically or international routes? And as you mentioned, a lot of it's also based on, what are they looking at in order to expand into new markets, new routes, whether that's, more domestic or international, and which regions they're expanding on, and where are their focal points.
So give us some goods.
So, you guys seen, coming out of COVID, the hot destination for a lot of travelers was Europe. As a lot of families and tourists from the U.S. were predominantly going to Southern Europe, Italy, Spain, France, were the hot destination points. So Delta kind of grew capacity into those transatlantic markets. And they also noticed that just coming within the last, I guess, about a year or so, travel demand has picked up significantly. People are continuing even to travel outside of the peak months of spring break and summer, which, they've identified as the shoulder months. So it's prior to spring break, post summer. So they've actually grown capacity and expanded more routes within those shoulder months. So they're, growing markets within Europe. The other area that they're focusing on is the Trans-Pacific. United has a strong presence in the Pacific, and Delta really wants to grow that presence there as well to compete head to head with United in that particular market. And as lately they've kind of expanded into that region with flights to Taipei, to Hong Kong, more flight and service to Incheon. But in the pipeline, they're discussing even expanding more further into the Pacific. Those are some of the things that they're looking at.
Yeah, and it seems that way, especially to some of those international destinations.
Right.
Rushi, you briefed the MEC on this, but you talked about how Delta and United are capturing the industry profits, and Delta in particular is killing it financially. That they, we just came out of our supposed 100th year anniversary, and record profitability, record revenue. What does that mean to you, and what's the landscape there?
Yeah, you touched on it. Delta and United make up over 100% of the U.S. industry's profitability amongst the carriers here in the U.S. The reason for that is because they focused a lot on premium traffic, premium demand from passengers. That primarily their average consumer that buys a ticket on Delta or United is considered upper to middle class, over 100,000 in income. They have the disposable income to spend for travel. They want to travel. They want a premium product. So they looked for Delta. They looked at United that offers those premium products. So those two carriers have been catering to these passengers, and hence expanding premium cabin seats and just offering a more of a luxury product than the other carriers. So that's been driving profitability within the last couple of years. Delta's leading the carriers in terms of pre-tax margin over the last few years. There's some low-cost carriers that have a little bit higher just because of their cost structure. For example, Sun Country, but they're not an immediate peer. But if you look at the big four, Delta's been surpassing majority of them in terms of pre-tax margin. They're head-to-head in United on profitability and revenues, but just when they control their costs and look at the margins, they've been in double digits or close to double digits over the last few.
Yeah, and so you mentioned the premium cabin, right? The premium product, and Delta really prides themselves on the Delta brand, right? Do you feel that premium seats are a structural change? Is that an economic change from a macro standpoint, or is it just a cycle?
I guess it's a little bit of everything you just touched on. It is a trend at the big carriers. American, Delta, United are all focused on premium travelers, premium economy seats. If you look at the seat configurations on a lot of their aircraft, they're expanding into either Delta Comfort, they're adding more seats, into business class, premium select. They're basically taking seats from the main cabin and trying to move it upwards to the premium first class business cabins to offer more seats there. Not only are they selling more seats for the premium cabin, they've kind of realized they can make more money doing that as opposed to offering upgrades and things of that nature, which they've done in the past. So that is a structural shift that we've seen across the airlines. They are focused on that. The unit cost per a premium seat versus a main cabin seat is a lot higher. So that is driving their top line revenue and then also their profitability. So that's one area that these carriers are focused on, is expanding into the premium cabin.
Yeah, and you mentioned off air in our planning, but it seems like coach seats or economy seats across the industry are a bit saturated. Tell us about that.
That's right. So, Delta has their main cabin. They have their economy cabin. They also have what they call basic economy. And those basic economy was basically created to compete with the low-cost carriers, ultra low-cost carriers like Spirit and Frontier. And then actually those carriers have now started offering premium seats just to compete with what Delta and United and the majors are offering. So it's kind of like a role reversal. They created this basic economy to compete with the ultra low-cost carriers, but then coming out of COVID, these low-cost carriers were struggling, and they're like, hey, how do we compete with the big guys? And so they started offering more premium seating, which, was interesting as well. But yeah, you're right. Those are some of the things that, especially from the economy cabin seats, they are saturated. You have a lot more carriers that are offering those type of seats, and there's just a few within the U.S. that offer that premium brand, that premium quality seats that passengers are looking for.
Right. Gotcha. So, we're coming off of this record year, this record anniversary year, and we talk about record profitability, record revenues. Delta is talking about expanding their market share, expanding their growth. And so I want to pivot. How should pilots think about this record profitability when negotiating a long term contract?
Absolutely. So when we go into negotiations, a lot of it's driven by the company's ability to pay. That's an argument that we hear a lot. And especially in this time period that we're, entering into Section 6, Delta's doing well. They've had $18 billion profitability over the last 4 years. Since post-COVID, their margins are either close to double digits or hovering just near it. So they're flushed with cash. Their liquidity levels are great. Over that time period, they actually reached investment grade on their balance sheet. So a lot of stuff they've done post-COVID has benefited the airline itself, but it's also benefited the pilots going into Section 6. They've, ever since COVID, where they had huge cash burns, they're losing millions of dollars a day. That was a focal point for Delta management. They wanted to fortify their balance sheets. That was one reason they paid down debt. They basically grew their cash reserves. They've driven liquidity higher. They've paid off high interest debt. They also focused on just keeping a balance sheet that's investment grade, which they've achieved over the last 2 years. So they're one of very few airlines in the US that have an investment grade balance sheet. So they're in a position of strength. They're in a position of stability, liquidity, solvency, all those adjectives you want to describe. They're pretty solid from a financial perspective.
Awesome. That's exactly what we want to hear. Yeah, so it seems pretty clear, but I'll ask anyway. So, are we negotiating from a position of strength?
Absolutely. We are negotiating from a position of strength. Just what I alluded to, they have a fortified balance sheet. They're investment grade. They have high liquidity, short-term investments. They have the ability to pay. They are profitable. Their margins are high. They have a unique business model where they're focused on high premium, high demand customers. They even pride themselves as a brand, a very loyal brand, very loyal airline. And they position themselves as one of the top airline companies in the US. So they've put themselves in a position of strength, and that kind of allows the pilots to enter Section 6 in a good environment, in a good landscapes. But yeah, pilots will be negotiating from a position of strength going into this Section 6 negotiations.
Yeah, and it appears not just from a strength position economically, but there's a lot of leverage that pilots have operationally as far as things like scheduling items and trip coverage, which have been more token terms, right? And we don't need to go down that rabbit hole on this podcast, but pilots often think about locking in gains today versus betting on future upside. Do we capitalize on that strength now? Do we play the long game and see if we can get something better in the upcoming years? What's your advice for pilots? How do we balance that?
That's a great question. I mean, like as I mentioned earlier, we are entering negotiations in a pretty healthy environment in the U.S. from an airline perspective and from a macroeconomic. Just forget the stuff that's happening in the Middle East at the moment. But prior to that, we were in just the pure. When you look at it from a macroeconomic level, the U.S. economy is pretty resilient. It's been in an expansionary stage. GDP's been growing. There's been a slight hiccup just because of the government shutdown in the fourth quarter of last year. But overall, GDP's expected to be forecasted to grow within 2 to 3%. Inflation's hovering just above the Fed's target of 2%. It's come down lately, but high gas prices right now because of the conflicts in the Middle East are not helping. But, when you take some of that noise out, it is in an environment where, the economic elements are there. One thing that we also look at is consumer spending and consumer sentiment. It is pretty high from a, just a pure optimistic standpoint. High income individuals, high income families that earn an average medium income about 100,000 a year are the primary targets for Delta. They're the people that fly Delta or choose to fly Delta and purchase those economy and premium seats. They also are spending a lot of money and which is helping the economy prosper. And basically, consumer spending is one of the driving forces of one of the factors that we look at when we look at GDP growth and just the overall growth of the economy. And consumers are not taking their foot off the gas pedal when they come to spending. And these are the individuals that have enough in savings, enough in income to do that kind of thing. And a lot of that spending is in travel, and that benefits Delta. And so whatever benefits Delta also benefits the Delta pilots.
Yeah, that's great long range information too, right? So if pilots think, well, could be short lived, or all these geopolitical things going on, things can change on a dime, and they can, right? We want to give credit there. How much should pilots worry about some macro risks or risks like war, right? Things going on in the Middle East currently, oil prices, geopolitics. How much stock, from your perspective, how much stock should pilots put into that?
I mean, of course, uncertainty creates a lot of risks. And, there's a lot of uncertainty right now in the Middle East with the Iran conflict, stuff in Russia and Ukraine as well, still going on. I wouldn't say there shouldn't be any kind of stock put into that, but you alluded to it earlier. I mean, there's, other than the macroeconomic elements I mentioned earlier, as far as consumer spending, GDP and stuff like that, you mentioned oil prices. Delta is not immune from some of those oil shocks and things that are occurring right now, but they actually have positioned themselves better than the other carriers in the U.S. because, of course, you guys know about the Monroe facility that they have, the refinery. So that kind of helps alleviate some of that high oil prices. So when, if oil prices go up, jet fuel goes up, but Delta is able to buffer some of that increases in jet fuel prices based on the refinery that they have. So that kind of lowers some of their costs there.
Yeah, and for those who aren't aware, Delta owns an oil refinery in Pennsylvania.
That's right.
And so they're able to absorb some of the shocks of volatility in pricing, oil pricing there.
Yeah, historically, even without what's going on in oil prices, that refineries saved Delta anywhere, this is from a historical perspective, anywhere from 3 to 5 cents a gallon. So, that plays, if you think about that over a whole course of a year, that's pretty substantive savings from a, jet fuel perspective. So that's really helpful for Delta.
How should pilots think about inflation versus wage gains in a cycle where we are facing high cost, $11 eggs and near $5 a gallon gas, and whether that's temporary or not? So how do you balance that out, and what should pilots think about as they go into this contract cycle from an inflationary perspective?
Yeah, it's been a hot button topic over the last few years. As you mentioned, prices of groceries, fuel, gas, everything's been elevated and has an impact on people's wallets. Going into negotiations from an economic financial perspective, when we do costing of the contract, inflationary things are some of the things that we look at, especially when we're looking at out year gains. And some of those are, inflation is a metric that we look at when we start negotiating. What are the year over year increases? What are the out year increases? So that's where we look at, what is inflation today? What is it forecasted to be over the next 2 to 3 years, whatever the duration of the next contract is? And that is a factor that we look at and we do closely monitor, and it does play a role in our table positions and what we're asking for on the year-to-year basis. So,
yeah, thanks for that. That makes sense. Yeah, as rising costs year after year,
right.
And yeah, you never want to lag inflation. You never want to lag the industry. And so, we are in a position to lead the industry as far as contracts go. So that's an important factor too. I've often said you're only as valuable as you think you are as a group. Can you talk to that? How do you feel about that statement?
Well, as you said, you're only as valuable as you think you are. And Delta pilots are valuable to the company. They show up to work every day. Some of the factors Delta looks at from an operational perspective, completion factors, on-time performance, they've won those awards. And that's on the backs of the flight operations department, the backs of the pilots. They're the ones leading those metrics. They're the ones flying the planes. They're the ones in, I would say, on the front lines, basically. So, some of that awards and some of those distinctions that Delta's earned are because of the pilots. And so when look at it from a pilot's perspective, yeah, they are in a position where they've basically contributed to the airline's growth. They've contributed to the airline's profitability. So from their perspective, they are in a position where they deserve to share in those gains and to be rewarded for their hard work.
Yeah, thanks for that. Appreciate it. If you were advising pilots, what's one thing that you would want them to understand right now?
Every negotiation is different. I've been here at ALPA 10 years, and there's not been one negotiation that I've been part of that basically is a rinse and repeat process. Just because you got something last time doesn't mean you'll get something this time, whether you got this gain or you lost something in the contract. So, I just want pilots to be aware that when they go into negotiations, just think of it from that perspective. I know there's history and there's some things that happened over many years from a contract negotiations perspective, but each negotiation is unique. At the end of the day, be informed, as everyone says, be informed, be engaged, ask questions to your local representatives. But, at the end of the day, just be optimistic, be engaged, and ask questions when you have doubts.
Perfect. Thank you. Are pilots right to feel confident going into this negotiation, or should we be cautious?
I would say they should be very optimistic, just given what we talked about previously, just, the macroeconomic elements in the U.S., the profitability of Delta, profitability of the U.S. airline industry. But also just, there should be some hint of caution as well, just what's been going on, like we meant, the geopolitical risk, the uncertainty. But overall, I would say highly optimistic going to these negotiations.
This is great. I challenge pilots to jump on an earnings call.
Right.
Look at those investor decks. You go to delta.com, scroll all the way to the bottom, find the investors, and look through that, because it is pretty interesting what's going on behind the scenes, and to have a savvy leadership team, executive suite, really cornering the market on some of these things that are related but not quite to flying airplanes. So it's pretty interesting stuff. And you bring an excellent perspective and a unique perspective that we don't always get. So thank you for that. And, I want to also challenge pilots to, stay informed and stay engaged. But I also want to challenge you to look at multiple sources, right? Challenge your assumptions. I say challenge your algorithm, right? We're all fed noise. We're fed information through social media, through regular media, through all these different information channels. And sometimes it's easy to just be spoon-fed information. And so I really want to challenge pilots to take the time to understand information and challenge it and ask questions and ask follow-up questions. And, as far as negotiations go, or things pilot-centric, understand both the company's perspective and the union's perspective. Read the company comms, but read the union comms, and formulate your own opinion and find the real truth in that. Because at the end of the day, informed pilots make better decisions.
That's right.
And a unified pilot group drives better outcomes. And so we are really in a good position moving into Section 6 to be unified and to really secure a
industry-leading contract.
Bam. Tagline. We're not just negotiating today, but negotiating for the life of the next contract, and understanding where we are in a broader cycle in macroeconomics. It matters now more than ever. So, Rushi Patel, Senior Analyst, Economic and Financial Analysis Department. That was a great discussion, and honestly, a really important one. So I appreciate it.
Yeah, and I appreciate the time. Thanks for allowing me on.
Yeah, absolutely. We'll have you back for sure.
Thanks. Looking forward to it.
You're listening to Engaged, the podcast for Delta pilots. Follow us on Spotify, Apple Podcasts, or your favorite podcast platform, and receive notifications when a new episode is available.